Hello and welcome to Tokenomics. I'm Manisha Gupta. Namaste Web3 is designed to introduce Web3 to India and showcase its many benefits. This week's event focused on India's G20 presidency and potential opportunities for India in Web3 sector. The topics discussed included the need for a regulatory framework and opportunities that Web3 can bring to India. So how can India capitalize on the Web3 opportunity to achieve the $1.1 trillion growth projections by 2032? Here's my conversation with Baijayant Jay Panda. He's Vice President of BJP.
India's presidency of the G20 comes at a very opportune time. In recent years, particularly since the pandemic, the image of India has dramatically changed around the world. Even as we transition into becoming a middle-income country, we showed leadership to the world. We rolled out the biggest ever vaccination campaign in the history of the world. We helped more than 100 countries with hundreds of millions of vaccines, and some of which were developed in India itself. So that respect has gone up tremendously. India today is acknowledged, not just in the G20, but across the world, as a key player in shaping the major decisions that the world needs to take. And so technology, of course, is a very important part of this. This has come up. The world of technology is changing at an even more rapid pace than we've seen it do. And there are challenges. There are enormous opportunities, and there are enormous dangers of some of these technologies. And so it's a good thing that at this moment in history, and there is one more transition that's happening, in terms of the regulatory environment, the India that we knew traditionally was a follower. We'd wait until bigger countries in terms of economic size and more technological clout would take a decision, and then we would start implementing them. But over the last decade or so, you've started seeing that India is beginning to feel comfortable with its new sort of self-assuredness of starting to take some of the cutting-edge decisions itself. And I think we can talk about that as we go along.
Well, yes. So, that exactly was my next question, because while we are waiting to do a collaborated standard of procedures internationally, but we have seen other countries like perhaps US, Europe, Hong Kong, Singapore do come out with some basic laws when it comes to virtual digital assets rather. India really seems to be lacking there.
I think we need to understand that there are three issues that are very relevant to the question that you just asked. Number one, India has certain special challenges that most of these other countries don't have. So we have a challenge of terrorism, which has in the past operated through unaccounted cash, illicit printing of currency, cross-border smuggling. And I don't think it comes as any surprise to anybody to realize that illegal activities and criminal and terrorist activities rely on some of these new technologies to bypass the scrutiny of the authorities. And so India's challenge is far more than what a US might face, the drug smuggling cartels using some of these technologies for hiding their loot. But in India, it's not just a question about tax evasion. We have that too, because we are still transitioning into a country where the tax net is wide enough. And to widen the tax net, again, in the past, there have been traditional ways that people have evaded taxes. There are modern technological ways that people evade taxes. So we have these challenges. And as I mentioned to your earlier question, we are transitioning. I often use the phrase that New India today is well along the path of transitioning from what I used to call diffidence to confidence. Perhaps from our colonial experience, for many decades after independence, we used to hunker down, we used to seal off our economy. Now that has started changing. Indians are flourishing all over the world. Indians are flourishing in India as well. And so we are stepping up to make some of these decisions much more rapidly than we used to in the past. I gave the example of Vaccine Maitri. That couldn't have happened That massive rollout couldn't have happened without the use of technology and without the use of without policymakers taking decisions to facilitate that. So when it comes to policies or regulatory environment for cutting edge technologies which involve crypto or which involve blockchain, we have challenges that other nations don't have. But I want to leave my answer to this question with a thought that you shouldn't think that Indian policymakers are closed-minded. Caution is sometimes called for in blockchain technologies, in crypto. Even countries that don't have these challenges of terrorism and massive tax evasion, see what happened to FTX. So in hindsight, a little bit of caution is probably not unreasonable.
We get your point, sir. You know, while the regulatory aspect is much awaited, we do understand that this is an ever-evolving technology. What we started 5 years ago and what we've done on a yearly basis with NFTs and DeFi, decentralization, yielding of cryptocurrencies, I mean, something has been coming in every year. When you make regulations, would you say that this time around, perhaps, whatever regulations are made will need to keep changing as we move ahead?
The need for regulations to get updated is much more today because of the speed at which technology is changing. Now, you talked about NFTs. I want to use an anecdote. You know, when I was referring to you in your earlier question to older methods of tax evasion and other illicit practices, do you remember certain famous politicians suddenly becoming artists and selling their paintings for many crores of rupees? Now, can you imagine how much easier that would be to do if NFTs, besides whatever their natural market value is, were suddenly to trade in favor of certain individuals for huge sums of money? So, you know, there are real issues that one needs to think about. I think the reality is that our effort at being up to date is being bootstrapped much more rapidly. Look at the policy making engagements that are taking place between government, between industry, between technocrats, and between startups, which even, I mean, you may think that this is still a bit not as fast as it ought to be, but compared to just a few years ago, there's been a rapid change. And I'm very confident that in the coming months and the coming years, you will see a much greater capacity and capability of the regulators in India to keep up and take necessary decisions. So
you talked about the startups and entrepreneurs, and the last couple of years have seen a lot of talent drain happen from India because of lack of clarity here. You know, people are waiting that tell us whether you're doing it, not doing it, give us a time frame, because we've seen a lot of companies which launched in India now operating out of Singapore or a US or a Hong Kong for that matter, Dubai even.
No, I think what you're pointing out is a real issue, but we should see this in a larger context. So for example, quite a significant number of individuals, not companies, have been taking up residency abroad for a variety of reasons. In the past, it used to be because there weren't opportunities in India. They used to go abroad for jobs or for further career. But in the recent decades, it has been about tax arbitrage. It has been about regulatory environments which are easier to deal with. Now, the reality is a small island nation or a small free port entrepot which doesn't have democracy, where people can take decisions quickly, can in fact take very rapid decisions on regulations. That can be great, it can be very fast, but it can also have other consequences down the road. I think this is recognized that we need to provide a level playing field so that entrepreneurs, startups don't feel that even though their market is India, even though their talent pool is India, even though their technologies are now increasingly being developed in India, they need to be incorporated in one of these other free ports or island nations. It's something that we need to recognize and find solutions for.
So I have one more question, and this is after various summits that we do and a lot of people that we engage with on ground, that this is one community that the government doesn't engage with, with all stakeholders when it's about policy making or feedback or on ground with the kind of funding that's coming in, the many thousands of developers that we have in the country. What is the engagement levels that the government has with the private players or exchanges right now?
So I would say that this is a work in progress. Now, if you see, similar kinds of concerns used to be raised by other sectors, by traditional industries. But you may see now that it's a pretty regular practice for government. For example, leading up to the budget, the finance minister had wide-ranging consultations with all kinds of industry, with large industry, the traditional big names, with startups, with sectors that are both either new, manufacturing, services, technology. So this is much more so than used to be the case in previous years and previous decades. Now, as far as the tech sector is concerned, as far as something like blockchain and Bitcoin is concerned, this is really the cutting edge, the bleeding edge, if you will, of the regulatory questions that need to be answered throughout the world in all jurisdictions, as we've just been talking about. So I think you are beginning to see a level of consultation that is more than what used to be before, and I'm sure it will keep on increasing, so that if you mirror what is happening with other sectors, you will see that there is a recognition by this government, which was not the case earlier, that all, I'll give you an example. A decade or so ago, more than a decade ago, when the companies law was amended, as soon as it was amended, everybody was up in arms because there had been no consultations. There were completely arbitrary clauses in there, which many corporates just figured that was unworkable. So from day zero, it was a controversy, and it lasted for several years before corrections could take place. I think today you are seeing a change in that attitude. There is a recognition that before regulations are finalized, there will be consultations. Now, every decision will not be to the liking of every stakeholder, but in a country like India, we will keep up, we will change as necessary. And as I said, even if you make perfect regulations today, it will be out of date in 1 year. So
maybe before that.
let's not, as they say, make the perfect the enemy of the good. Let's accept good developments in the regulatory environment, even if they are not perfect, with the belief that it's an ongoing process, we can keep improving it.
All right. That is Jay Panda, Vice President, BJP, telling us that the consultations with the private stakeholders is rising and is on, and will perhaps see better of that going forward. And let's not make the enemy of a perfectly good technology out there. But with that, let's slip into a short break. We'll speak more about the Web3 opportunity on the other side with Srinath Sridharan. Welcome back to Tokenomics. Now, according to NASSCOM report, Web3 investments in India have grown 37-fold from the beginning of 2020 to the first quarter of 2022. The $1.1 trillion is projected to be Web3's economic value addition to the India's GDP by 2032. The adoption of technology like blockchain has the potential to drive growth in key areas of the Indian economy, such as agriculture, healthcare, public distribution systems, and education, and so on. But the question everyone is asking is that will India have to come out of crypto shadows to achieve that? And that exactly is my first question to our guest. Srinath Sridharan is policy researcher and corporate advisor. He joins us right now on CNBC-TV18. Srinath, hi. The whole conversation that we've heard from the ministers talking about on how the technology is great, but it will have to come out of the shadows of crypto. How do you see that statement? How would you elaborate on that?
I think the fundamental mistake that the crypto industry has done is it has challenged the very supreme authority of the state. If you're saying that you're going to print your own currency, you're going to, I think, make enough people mad in the officialdom. I think we'll have to go beyond these narratives, right? I mean, crypto, for example, if you look at it as an asset class, could have far many greater uses than ever before. Who would have actually thought that there's value for streaming music? I mean, 20 years ago, we still had music cassette tapes, and we thought that's the best thing that could happen after baked sliced bread, right? But today, how many of us even have any device where you have to use an external interface? None. We have Bluetooth, we have streaming music, streaming video. The very fact that we're doing this recording not from the studio, but sitting somewhere. So I think if we move beyond the crypto narrative, I think there's far more to Web3 as a concept. And I think we have to go beyond that. Two is, I think enough has been said and done. The recent legislation to bring cryptocurrencies and crypto assets under the KYC norm and to bring them under AML, I think it's a phenomenal move. I think one would wonder, why did we not think of it for the last so many years when the stakeholders were fighting with each other and taking each other to court? Simple one. If you regulate, you're going to create, I think, a fair playing ground and not push it under the dark web completely. And that's the biggest challenge. And that is where the biggest opportunity for crypto also is to reinvent itself to say, how can they be useful in the larger public sphere? Not just talk about assets and not just talk about currencies.
Clearly. You know, the other concern really is about policy regulations. And while India has such huge taxes right now, but the G20 presidency is expected to do India good. And we've heard some statements come out of that as well. You know, the bigger concern has been, will our taxes go down? Will we listen to the global markets, or will the global countries also start putting these taxes? Where do you think is the conversation moving to?
So I think the entire tax narrative, if you look at the last, say, 13, 14 months of the taxation, or slightly lesser, we have seen a huge migration of Indian investors moving out of Indian virtual digital exchanges to elsewhere. It is not as if they have stopped trading in crypto. It is just that they've simply migrated from the Indian exchanges which were taxing them. It defeated the very purpose of saying that we want trackability, traceability, and the authority to tax domestic assets. The simpler one, in my mind, theoretically, would have been to bring in the KYC AML regulation and say that we're going to tax at source if you're going to book a profit. You can track them, you can trace them, and the digital assets, bring them under simple, let's say, a DMAT form, and say every single DMAT statement of yours will also reflect any BDA that you have, and I have the right to tax it. Far simpler. I think I want to put a context here as a stark contrast. We have not been able to still cleanse one of the oldest physical forms of assets, which is real estate, right? I mean, we do have KYC, we do have AML, but guess what? We don't have even digital records across the states. Land is a state subject in India, and we have not been able to have a uniform regulations that could track ownership of real estate, land. That's a tangible one. So in the intangible space, which is all about virtual digital assets, we have a long way to go. And I think we must bring a level playing field. And that's a moot point about it.
Clearly. The other discussion really is about the policy regulations. And let's leave crypto aside for a moment, talk about blockchain and Web3. We've seen NFTs go down in a big way in Indian markets as well. The resale value hasn't been there. And all those enthusiasts who came about in the last couple of years seem to have disappeared right now. So when you look at the technology itself and the bigger theme, which is Web3, where do you see India headed? And what kind of policy regulations do we really need here?
So I think let's look at it a little long term. I mean, Web 1, Web 2 were clearly the Western ownership, right? I mean, India did not have really political influence in the global sphere to have any say in the Web 1, Web 2 governance. So what did it do? It allowed for the developed nations to have their larger platforms to occupy economic heft, be it the social media giants or be it the tech fin giants that we see. Web 3 is going to be far more about personalized internet, which means the larger policy challenges. Can India really afford digital colonization by any other Western power? Let's look at it from that angle of foreign policy. So which means we will have to bring Web3 narrative to mainstream conversation about what is our strategic power. And if you look at it from that on one side, and the other side is economics, pure economics. All these narratives would ultimately translate into economics in the creator economy that we live in. I mean, we may not like the TikToks of the world, we may not like the social medias of the world, but how do we participate in the global governance of the internet? And this is one chance that India has. I mean, to be a little sarcastic, 30 years ago, we were seen as probably cyber coolies. We were just lifting the heft for outsourced job for the Western world. And we were very happy with rupee and dollar arbitrage, and we made our wealth there. But now we can't afford to be cyber coolies anymore. We will have to lift the knowledge space and create intellectual properties around it. That's the Web3 narrative, and we can't afford to give it up. let's take a look at, let's say, what a China or a Russia or a US would do. They would bring in international relations, they would bring in coalitions and nation states into this entire Web3 community building form. And we can't afford them to colonize or monopolize the internet. And that's why Web3 becomes far more important for us to talk to, not just from economic or empowerment point of view, but also say that how do we look at the future of global states, including India? And that's where Web3 formation needs deeper conversation and not brushing it aside, saying it's the youngsters, it's a bunch of crypto folks, we don't like them, so we will not talk about it. More and more important that we must talk about it.
Oh, yes. The younger population and a lot of tech-savvy population and so many developers and thousands of numbers in Indian markets. And we've seen a lot of funding coming into the Indian market too in the last 3 or 4 years. How do you see that funding growth into India right now? Also, Srinath, that the $1.1 trillion economy that we keep talking about, how achievable is that?
I think the second one is easier to answer. How achievable? I think depends on our policies. I mean, one thing we'll have to be very clear. The 70s and the 80s, we saw a lot of brain drain of Indians going to the West, especially the US and the UK. The narrative that the both sides use currently saying if we don't bring in encouragement to Web3, the brain drain will continue to happen. Yes, it will. But that's the nature of talent, the market for talent globally. The nations will make it far more easier to attract talent to come and bring their incubation and innovation so that they can benefit economically from that. And that's a challenge that India is going to face. We have never achieved, let's say, the reverse brain drain globally. We have never been able to attract global citizens to India to say that this happened probably thousands of years ago when we were Bharat as a civilization. But in the modern times, we now have to start with saying, can we at least hold on to our youth in India? Two, can we attract our Indian folks who are abroad back to their hometown, which means it's not just about Web3, it's not just about policies, it's also having about livable cities. And that's a larger conversation, which I think the Bangalore folks will soon start cribbing about. The cities are getting choked. You might be able to raise funds, but how do you deploy it and is there quality of life? Web3, coming back from innovation and youth point of view, I think it's achievable, 1.1 trillion, give or take 1 or 2 years on that. This also assumes, I've seen that report, it assumes there could be a slowdown globally, there could be, let's say, investment winter. But let's face it, it's a global capital which chases talent, which chases innovation. And India has that in abundance. And how do we now wrap around the ancillary units around this entire Web3 space? Which means, let's take a look at the innovation capability. We have the digital framework. Indian digital framework is one of the pioneering efforts. Can we improve on, let's say, the intellectual property? Right. Which means our patent office, can it really wake up from its slumber and say, we are going to actually encourage innovation on Web3, start filing trademarks and patents, global patents sitting out of India. And not push our youngsters to file them elsewhere. And three, more importantly, can we give them actual protection? Sometimes it's okay to be protectionist in policy. It's not seen as unfair. All the countries do it. India should start doing it as well, saying that let's protect our Web3 entrepreneurs and let's say encourage them to go abroad, encourage them, give them all policy and export competitiveness. And this is the time to do it. When I say this time, probably the next 3 years is what we have before the world catches up with all this innovation.
Absolutely. Well, there's so much to do and hoping that there is more clarity regulatory-wise and otherwise in sense of conversation and funding when it comes to the Indian markets there. Thank you so much, Srinath. What a pleasure talking to you. But with that, it's a wrap on this edition of Tokenomics. News continues right here on CNBC-TV18. Do stay tuned.
Oh, yeah. Settle down. Oh yeah, that's it. I've been through the storm, I've been through the rain. I'm still here standing, unshackled and chained. You better buckle up, cause I set my sights. But this bad boy ain't leaving without a fight. Roar it hard and dark, cause there ain't no fire without a spark.
MCX presents crude oil mini futures contract 10 barrels, now available for trading. Refer to circular on mcxindia.com for more details.
for organizations, two very critical things. One is to have a more integrated approach towards risk management, not just look at risks in a function or in a silo, but have a more integrated approach towards collaboratively in your organization and in your ecosystem, what kind of risks can you face. And the second would be to look at key indicators, or rather data points or external indicators or signals which can help you understand when a risk can play out.
To nominate your organization for the India Risk Management Awards, visit the below link.
Whenever I had ice cream or cold water,